The big beautiful bill contains over 800 billion in business incentives that nobody's talking about. And if you don't claim them by the deadline, you're literally leaving money on the table that your competitors will grab. Talking about accelerated depreciation schedules that could save you millions. R&D credits expanded to cover almost any business improvement, and workforce development grants that pay you to train your own employees. You may think this is all political theater with no real benefits, but I'm here to tell you there are direct incentives, credits, and grants that can add 6 or 7 figures to your bottom line. There's the reality. If you're watching this, you're a business owner who's heard about the big beautiful bill, but has no idea what's in it for you. Maybe you've watched my last video on the big beautiful bill. Maybe you think only huge corporations can access these programs, or you believe it's too complicated to figure out. Or you're assuming your accountants will automatically apply whatever benefits exist. Well, here's the truth. The bill contains specific provisions for small and medium businesses that most people haven't discovered yet. These aren't automatic. You have to actively claim them, and the windows for claiming some benefits are already closing. Most accounting firms, they're focused on the headline changes. They haven't read the full 2,000 pages to find the hidden opportunities. They don't understand the new credit structures or how to stack multiple benefits. The truth is, businesses that understand these provisions can reduce their effective tax rate to single digits while getting paid by the government to grow. Those who don't will watch their competitors get subsidized where they pay full freight. I'm John from Numeratus, and we've analyzed every provision of the bill. We know which benefits apply to which businesses, how to stack multiple incentives, and most importantly, how to claim them before deadlines pass. If you've stayed on this video this long, you know there's money in the bill for your business. You want to know exactly what you can do to claim it and how to. Some of these benefits are retroactive to January 1st, meaning you could already qualify for hundreds of thousands in credits for activities you've already done. But if you don't claim them by the deadline, they're gone forever. It's not surprising to hear business owners who just discovered they missed out on credits from Q1 and Q2. Don't let that be you. The deadlines are real, and once they pass, the money's gone. We're tracking all the deadlines at Numeratus and alerting our clients, but you need to act fast. Some of the biggest opportunities expire at year end. Let's get into the specifics. Point number 1, depreciation gold rush. If you bought any equipment this year, pay attention. This could save you hundreds of thousands. Section 847 of the bill, the enhanced accelerated depreciation provision, allows 200% depreciation in year 1 for qualifying equipment. Not 100%. Yes, that's right, 200%. Buy $2 million in equipment? Deduct $4 million this year. Your accountant probably thinks this is impossible. Most don't even know about it, but it's an intentional incentive to drive business investment. Here's how you can use this. Any equipment that improves efficiency, reduces emissions, or enhances worker safety qualifies. Document the improvement metrics. File Form 8849-E by December 31st. If you bought manufacturing equipment in January and your accountant told you 7-year depreciation, wrong. You could be claiming double depreciation. That's potentially millions in tax savings on equipment you were buying anyway. Here are some enhanced depreciation qualifications: efficiency improvements, safety enhancements, environmental benefits, and technology upgrades. The key is that almost any new equipment can qualify if documented correctly, but you must claim it. It's not automatic. Depreciation is powerful. The R&D credits got completely reimagined, and this applies to almost every business. This brings us to point number 2, the R&D Credit Explosion. If you run any kind of business, restaurant, retail, services, this applies to you. The bill expanded R&D credits to cover business process improvements in any industry, not just tech companies anymore. Here's what qualifies now: developing new recipes, creating efficient workflows, designing customer service protocols, even training programs for employees. If you're improving any business process, it's potential R&D. Think about it. If you run a restaurant and you're developing new menu items, that's R&D. Creating a more efficient kitchen workflow, R&D. Training system for employees, R&D. Restaurant chains claim $400,000 in R&D credits for activities they were already doing. They just didn't know it qualified. Here's how to claim it. Document every business improvement activity. Track time spent on development. Keep records of iterations and improvements. File Form 6765-BBB with detailed documentation. Expanded R&D qualifications are process improvements, training development, efficiency enhancements, and customer experience innovations. The reality is, if you're improving anything in your business, you're doing R&D, but most businesses don't document it properly and miss out on massive credits. Now, this next provision is literally free money for businesses, but almost nobody knows about it. And this brings us to point number 3, the workforce development windfall. If you're training employees, the government will pay you to do it. The bill includes $50 billion for businesses to train employees. Not loans, grants, free money. Here's the catch. You need to structure it correctly. Create a formal training program with documented curriculum. Partner with a local educational institution, even just for certification. Track outcomes in job placements. Submit applications before quarterly deadlines. A great example are business owners who may need to train 20+ new employees, budgeted over $100,000. They discovered this provision. They restructured their training as a formal program, and they partnered with local community colleges and documented everything. The result? A $150,000 grant. The government paid him more than his training cost. Plus, employee trained under these programs qualify your business for additional tax credits, $2,000 per employee. Meanwhile, his competitor doing informal training paid $100,000 out of pocket and got nothing back. Here are some workforce development grant requirements. You need a formal program structure. You need an educational partnership. You need outcome documentation. And you need quarterly application deadlines. The opportunity is getting paid to build the workforce you need anyway, but you must apply. These grants don't find you. Look, the big beautiful bill isn't just legislation. It's the largest transfer of wealth to businesses in American history, but it's not automatic. You must know what to claim, how to claim it, and when to claim it. Every day you wait, you're missing deadlines. Every benefit you don't claim, your competitors might be claiming. And once these windows close, the money is gone forever. If you want to understand which provisions of the bill apply to your business, if you want to maximize your benefits while they're still available, and if you want to turn government incentives into competitive advantages, you need specialized guidance now. At Numeratus, we've decoded the big beautiful bill. We know which provisions apply to which businesses, how to stack benefits, and most importantly, how to claim them before it's too late. Visit numeratus.us to learn how the big beautiful bill can transform your business finances, because this isn't just about tax savings. It's about getting your share of $800 billion in business incentives.